Today is the 11th of January 2011, and we'd like to welcome you to our presentation on the foreign exchange market. And I'm quite sure that everybody's been amazed with the movement of the market starting the first trading week of the year. The remarkable report from the ADP was the sustaining factor where the US dollar had remained much stronger than it normally would on the start of the trading week, and it's currently working at the 80.80 level, and indeed had a wide range from 78.65 to as high as 81.45, which has been the cap of the US dollar index, and being able to penetrate this price level of resistance at 81.45 will trigger the euro to be able to move lower. However, the corrective move is being made now, where we could find the euro working at the 1.2974 level with a high of 1.2991. However, the low that it did here at the previous day had been as low as the 1.2872, which was actually what it was targeting. However, as we said, the way it looks as if for the past 4-5 trading days of the year has started to move lower and prompted the pound as well, in contrary to the fact that it had moved slightly higher on a day-to-day basis, comparing it with the euro dollar. And that shows that the cross rate on the euro pound here on a daily basis consecutively had been more influenced by the movement of the euro moving lower, sustaining a higher dollar index and working primarily with the bullish players who have recently gotten back in the market with some substantial volumes. We're looking at it with a friendlier stock market and prompting the friendlier reports from earnings and jobless unemployment rate rather at 9.4 had prompted the dollar to move higher. Looking at this rate right now at the 0.8303 right now on the cross rate on your euro pound, we're looking at the 83.30 level at around the high of 0.8338, which now serves as the resistance. However, looking at it here on a daily basis, and let's see if we can do a weekly on the cross rate, where we're looking at the Fibonacci retracement, where we've taken a longer outlook here. Let's see if we can move it right here. Taking the lowest point here at the 0.8066 to its highest price and retracing it back, it's below the 61.8 retracement level, where we could find a low at 0.8283, and the likelihood that it would penetrate lower once the US dollar had indeed penetrate the 81.45 level on a way up would confirm the target level of 100% retracement on the euro pound, prompting an equivalent. Let's see if we can move it backwards, targeting the level here on the euro on a weekly basis at the 1.25 1.69 to 1.2580 level, which we have indicated in our market view report dated the 10th of January, where a corrective move is actually expected, that it's actually showing right now, and with a slight high of 1.2991, where it is a correction. And so with the pound at 1.5638 on the high side. Now looking at it here correspondingly with the dollar yen on a weekly basis, you could see that the actual retracement period here with a high of 83.48 and targeting back the previous high around 83.66, which is more likely that in the long run it would try to penetrate and reach the previous high of 84.41, correspondingly with the dollar Swiss with a higher trend line and its support, and actually has moved much higher now at the high of 0.9782. At this point in time, we would like to emphasize more that looking at it more on a weekly basis on most major pairs. Let's see if we can move it here to the weekly charts, that the engulfing pattern, the candlestick formation and configuration, most of it that has engulfed the previous bars formations, have already indicated that the pound is more supportive comparing it with the euro, which actually that's the reason why the euro pound had been more on the downtrend, with this engulfing bar engulfing most of the previous week's uptrend on a single week's transaction, together with the dollar Swiss and the dollar yen, which is obviously indicating that a dollar correction slightly, but would have to continue to move higher, targeting its initial objective at 81.45. And once this has been taken out, then you would see that the continuation of the major pairs would be lower, contrary to the movement of the dollar higher. Looking at it for this week, let's see how the market would continue to move towards the end of the first week. And the second week would be more volatility is expected, with a wider range between 150 to 250 pips in between 2 to 3 days of trading. So let's just see how far this market would move, and we would like to say thank you and good luck to your trading for the week and for the year.